Tom Lee, the CNBC contributor and head of research at Fundstrat Global Advisors, is here now. In a moment, we can reach Bitcoin. I would like to discuss Nvidia, another cleansing occurrence. Do you think the clearing event will be bullish? I mean, probably. When Nvidia's earnings are announced, I believe the market becomes extremely cautious. After that, we'll see that demand is high, and I believe the market exhales with relief. We then retreated to a support level after becoming somewhat bullish over our skis. Do you feel more at ease? Yes, exactly. I believe that the majority of the main indexes have retreated to what our expert, Mark Newton, would consider support in technical terms. Thus, small caps have held above their previous highs. The S&P completed a 60% retrace of its recent gain, and the Nasdaq is on the support line. All of these support levels are bullish. Given that the Trump trade has been ongoing for some time, and that the journal claims a meltdown may be imminent, I was wondering if things were getting out of hand. Do you believe that we are only just beginning? I suppose there are many things for the markets to like. He likes easy money. He likes minimal regulation. He wants fewer taxes. There are a bunch, really. Perhaps you think it's more than a 2E rally. That's correct, and I believe that markets may be reversing their trend because, under Doge, the Department of Government Efficiency, defense spending may result in cuts to industries and healthcare. Investors can therefore concentrate on items like financials and small caps, as well as more deregulation of animal spirits. Okay, how about medical care? You specifically mentioned that. Not only will Doge be searching for further methods to be more efficient, but there are also changes taking place with RFK Jr. How does the market sort of balance it out? We'll talk to Mark Bellini about it in a moment. Indeed, I believe that this will be a difficult time for healthcare awareness because, recent remarks about how much healthcare spending dominates advertising outside of the electoral cycle. Indeed, there are worries regarding the safety of some vaccines and RFK's leadership of HHS. Thus, I would simply state that clouds exist. Opportunities will still exist, most likely in the biotech sector, but they will be difficult. Regarding the markets as a whole, Tom, you believe that the gradual decline in the markets last week, before Thanksgiving, won't endure, and a number of variables give you optimism for the upcoming weeks. And the Treasury Secretary's announcement is one of them, which relates to what we've been discussing all morning. Will some of the uncertainty be eliminated? To find out who's in, you're following Polymarket. What? When Musk tweeted about Letnick, Besson's odds increased, even though he was already 70. Now what? Both of them have fallen. Both of them have dropped to below 40%, so it's mostly because Mark Rowan and Kevin Warsh have risen. Are we going to use Polymarket to select the Treasury Secretary? Stranger things have happened. Do you believe that this week's announcement will clear up any doubts, or is it not the most crucial factor? As we eliminate doubt, I believe. Therefore, it might not be revealed for another week or so. That eliminates some uncertainty. Thus, I would classify it as a clearing event. Additionally, I believe the Trump trade is still in place. You stated that we're in a good spot dovishly, even though the Fed might not reduce as soon as it wants to. Yes, exactly. When Fed Chair Powell hinted last week that he would slow things down for December, the markets were a little caught off guard. A year later, in December 2025, however, the amount of predicted cuts remains unchanged. He's simply shifting some of the timing, so I believe he's dovish. Let's start talking about the markets. Naturally, Tom Lee, the managing partner, head of research, and co-founder of Fundstrat Global Advisors, is here at Post N9. Year-end S&P target, 6,300. Tom, it's great to see you. I'm glad to have you. You like to refer to them as easy plays or granny shots, and I assume that list has grown over time. Yes, it has, but it has remained at about 35 names. Only excellent names that fit the appropriate subjects. They become a granny shot if they appear in more than one of our 7 themes. I suppose there is more conviction behind their names. Higher conviction, really. And because these are large-cap stocks, I believe that most people will recognize these names. Many are looking to 2016 for comparisons, and there is some debate today regarding cyclicals and their rationality. However, some contend that the support for commodity prices that you would have had in a previous cycle is no longer present, Is that something you purchase? Commodity prices aren't always necessary to support cyclicals. Yes, energy is important, but so are materials to some extent. Yes, it is correct. Therefore, I would say yes to those. Even though increased drilling means lower oil prices, I would say that the future for energy equities under a Trump presidency isn't as good as some may think. However, for cyclicals like industrials and financials, this is a terrific environment for all of the things you guys were talking about, including deregulation, animal spirits, M&A, and declining costs of money. In the next 6 months, for example, do you believe there is a genuine chance of reflation? There is a metric known as one-year inflation, 1 year forward, which shows how markets are repricing. What does one-year inflation look like to the markets in a year? That has been edging closer. In actuality, it is currently 3.6%. In the past, it has served as a catalyst for the market to become anxious. Therefore, I am uncertain whether fiscal spending or exporting is the cause of that. However, markets are beginning to consider it. Or perhaps a more optimistic forecast for GDP could raise inflation expectations. Trade policy is perhaps where Trump Trade 1.0 ran into issues. Do you think the market is looking past his performance on tariffs, which he has been quite consistent on, or do you think that everything else, like deregulation and lower corporate taxes, would make up for any trade weakness? If someone was attempting to present a bad picture, I believe that the trade and tariffs are what people are thinking about. Naturally, though, that is the one where we are unsure about the policies. Markets will undoubtedly offer a wealth of real-time input, and I believe that this will influence the policy. Therefore, I believe that we should generally anticipate a pro-business environment that is also likely to be equity-friendly. What is the current state of the fundamentals, the recent rise, the multiples, and your earnings projections for the upcoming year? As we come to a close, I believe that earnings season has remained quite stable. Energy and certain commodity industries, together with healthcare, have been a drag on earnings, as you are aware. However, industries like electronics and industrials continue to generate solid figures. The outlook for next year should be favorable, in my opinion, as housing activity is increasing and financial costs are declining. Additionally, small caps actually benefit greatly from mergers. Additionally, small cap earnings have grown by about 40%. Therefore, I believe it still pretty much leads us to the same trades, which are that we should be more cyclical over the next 6 months, and then also consider Bitcoin and small caps. Why little caps? Combinations? Could you please elaborate on why tiny caps will benefit more strongly? The background, however, plays a role. For the past 5 years, small cap stocks have underperformed by the biggest margin in 25 years. They are currently selling at a 7 PE discount, or 10 times the median PE relative, which is about 18 times for the S&P. In addition to having higher profits growth, small cap companies, such as industrials and regional banks, have about 44% of their earnings that are what I would describe as very cyclical. Compared to the S&P, that weight is greater. Finally, there's a lot of money on the sidelines, you know. Additionally, I believe that small caps are the best option for those seeking market breadth expansion. They don't have the trade exposure either. They profit from less regulation and taxation. You make a valid point, but without the tariffs, they seem to be in the sweet place then. Yes, and there may be a significant margin of outperformance. They've underperformed by about 100 percentage points. Therefore, I believe you can make up that difference in the next years. Elon, whom we mentioned just now, supported Senator Lee's idea to shut down the Fed over the weekend. In essence, a story about Powell being ready or being prepared to justify a removal appeared in the journal over the weekend.